Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So as you know, the markets have been going up quite a lot in the last 6-7 months, okay? And as you can see here, this is the S&P 500 year to date. And as you can see, there are companies that have done absolutely amazing, like Nvidia's, that's up almost 160%. We've got Microsoft 130, 200, 24%, and so on. Like for example, companies that I own in my portfolio, like Broadcom, is up almost to 56%, which is absolutely crazy. Okay, and a lot of these companies are up because of the AI and everything else. But that doesn't mean the entire market is basically overvalued, and there are some values in other old companies that have been around for quite some time. They might not be in that sector where, you know, we're talking about AI and so basically weight loss and all of these things, because if you look at the companies like Eli Lilly, which is basically up almost to 60%, it's absolutely crazy. However, because they've got a drug that is now used for weight loss. So what I want to do today is just look at one simple company that have been around for quite some time. This company is a dividend king, okay? And what I want to do is I want to give you the financials, the details, and so on. It was a recent request from a member of the community, so I want to go over that company. But before we do that, as always, okay, I always talk about this, and the reason is because it genuinely helps the channel. Okay, if you can join us in the Patreon account where you can, contribute about 15p per day, and you get access to all of these things, including the Discord, all the buys, all the sales, that will be definitely appreciated. The company we're going to talk about today is Abu Laboratories. This is one of the oldest companies out there, and they did a spin-off basically about 10 years ago, I think, and about ADV. So ADV is another dividend king that is doing really well, and they have basically split from this company, which is quite interesting. Now, as you can see, a year to date, the company is actually down 7%. So we're looking at these companies that are up all of this, right? Even this sector is actually, some of them are up quite a bit, but when even ADV is up about 8%. Okay, but this company is actually down about 7%, which is absolutely crazy. So first of all, we just want to look at the reasons why the company is down maybe so much. At the same time, see if financially, if this is a good place. Because remember, what I've been doing and what I'm going to continue doing, and what I've learned from people like the Warren Buffetts, the Peter Lynch's, and all these massive, amazing, good investors, right, over the last whatever years, is you buy companies where nobody is actually paying attention to. So you look for these undervalued companies that no one else is talking about, and then before you know, all of a sudden everybody's talking about. I did that, and I promise you, if you watch my old videos, you will see it. There was a point where nobody was talking about Broadcom. No one. And I genuinely mean no one. Like, the CEO will come on TV, do his basically the earnings report, blah blah blah, go away. No one talks about the company. No one was interested in this company. Then the company started basically doing well. At the time, it was very undervalued, and at the time I was buying quite a bit, so I was buying a little bit here and there. So I think at the end I ended up with about 7 or 8 shares. I had to, of course, rebalance and so on. But the point I'm trying to make is, at that time, no one was looking at this company. Then they bought VMware, and all of a sudden, people are interested. Then the AI boom started, and then all of a sudden, right now, is up. Basically, I'm up 270 something percent. So, which is quite interesting. Another company that's done similar thing for me is Merck. No one was talking about it. Maybe nobody's talking about it right now as well. But I'm up 71%. So there are value. Basically, there are reasons why I like this type of companies, and basically, this is one of the reasons. So I want to look at the financials and see if if this is a terrible business and there's a reason why people are not buying in this company, or if it's sort of a hidden gem that no one else is talking about right now. So first thing we're going to do is look at the financials. I'm going to just quickly look at the revenue, so that you can see here basically the top total revenue here from $20 billion to $40 billion. So it doubled over the last 10 years, but there is a bit of a change here. So 2022, it was 43.6, and then it's now $40 billion. So there is that reason. So there's a bit of a dip when it comes to revenue. Okay, that could be so many different reasons, but right now maybe it was something to do with the drugs that they have. Maybe they ran out of patent. Maybe they were part of the companies that were actually doing something to do with COVID. Maybe something to do with that. Pfizer is going through something like that. But out of that $40 billion, they actually spend about $18 billion because they spend a lot of money on research and development. And the gross profit from that is basically $22.2 billion. And the net income, so from all of that, after they paid all of these taxes and so on, they kept about $5 billion, which is quite nice. Now, in terms of the EPS, earnings per share growth, you can see from 2014, basically it grew from $1.98 to right now $4.75, which is quite nice. And free cash flow per share, although it goes up and down, and this is something to do with COVID. Okay, so 2020, the company was fine, was growing, and 2021, 2022 was of course because of COVID, and that's exactly what has happened. And it now came back down to where it was before there, basically, and is kind of bouncing back when it comes to free cash flow per share as well as the earnings per share. Now let's have a look at the overall. So like I said to you, is the healthcare company, is a world-class dividend grower. The company name is Apple Laboratories, $102 billion right now. EPS, we're looking at about $3.22, 177 billion market cap. So it's a huge company. It's not one of those small ones. It has a narrow economic mode and beta is quite low. I like when beta is below 1 because that means the company is not too volatile. And P currently 31. I'm not sure if this is actual factual. Let's double check this. It actually seems right. So about 31 is the current PE. Okay, and then forward PE is about 22, and the 5-year average is about 25. So it seems a little bit expensive based on this. Okay, because if the company is been basically trading around had a high, basically multiples of 25 over the last 5 years on average, and right now it's about 31, that's quite expensive. And the price to free cash flow right now, we're looking at about 37. So in the sector is about 16, and the S&P 500 is about 28 right now. So it's actually way more expensive than of course the sector as we speak right now. Let's see what else we can learn about this company, and that's the dividend yield first part. So that's about 2%. $2.12 is what you get. Payout ratio of 48%, which is not too high at all. Latest increase was almost about 8%, and the 5-year growth rate of 12%. Now looking at the dividend safety, we look at growth streak, for example, 52 years. So that is a dividend king. A dividend king is a company that have increased that dividend for 50 years plus. So 52 years now. Safety 90%, so nothing to worry about. Free cash flow right now $4.9 billion. Free cash flow yield of 2.7, which is closer to 3% that we're looking for. Free cash flow margin of 12%, which is higher than the 5% that we normally look for. Profit margin, return on equity, and return on operating margins, all of them are absolutely fine. Return on invested capital about 13%. Last 10 years they've returned about 11%, which is really nice. On average, every single year for the last 10 years they've returned about 11%, which is quite nice. Revenue over year, the last 5 years, basically on average is about 6.4%, and the EPS is about 8%, which is quite nice. Current ratio is above 1, which means they've got enough current assets to use for current liabilities. And then next year they expect the earnings to grow about 11%, and then after that every single year they're expecting about 8%. So let's now go back here and check what these analysts on Seeking Alpha are saying about the company. So this is probably the reason is quite basically low for this company. So about 4% year over year growth in terms of EPS, but then after that they're expecting double digits, which is quite nice. So just for that reason, I think it should be higher. To be honest with you, so this year 2024 is a bit of a down year, and then after that it bounces back to that double digit, 7% and so on. And when it comes to revenue, again almost the same thing, 4% then 7% every single year more or less moving forward, which is quite nice to see. So nothing absolutely huge to worry about. So in terms of valuation, is Morningstar is saying right now is $104 per share. That's exactly where it is. It's about fairly valued right now. According to Wall Street, it's actually saying it's about 10% undervalued at the moment. According to TipRank, for the next 12 months, their price target is $127 per share. That's about 22% upside from where we are, and they're saying it's actually strong buy from them. Now, Seeking Alpha, on the other hand, $124, $125 almost, 20% upside from where we are, and it's a buy from them as well. So this is interesting. All of them kind of agree whether it's undervalued or fairly valued, which is quite nice to see. Again, if you are interested in the company, I would definitely add a little bit of a margin of safety. and maybe wait for a dip again, maybe below 100, and then maybe if you're really interested, of course, then start nibbling, start adding a little bit here and there. Now, in terms of Sharia compliance side of things, business side of it, absolutely no issues. Interest bearing debt is just 7%, 3% when it comes to interest bearing securities, as long as it's less than 30%, or basically all 33%, whichever you use, that's absolutely fine. And this one is less than 5%. Now, and basically shares outstanding, they've been buying back their own shares, then they actually diluted the shares in 2017. Maybe they had to acquire another business, because these companies, when it comes to pharmaceutical companies, they buy any new small companies that come out with a new drug or whatever, they buy them. So that's probably one of the reasons. But they haven't actually, they bought it back in some shares in 2022 and 2023. They bought it back 2023 and actually has stayed the same for a while. That's the company that I wanted to share with you guys. Again, it's one of those businesses that have been around for quite some time. You get the excellent dividend. You get in your 10% total return every single year, more or less. So that's basically what they were averaging the last few years. They're expecting about 8% or so growth next couple of years. So if you're looking for a pharmaceutical company that is very, very stable, okay, this is potentially one to look at. And just to kind of show you the summary of the analyst basically here, as you can see, this one says a strong buy, this one is also a buy. All of them are saying buy. This one says a strong buy, and this one says a hold. But this was December of last year, so they probably need to update that. Other than that, it looks like it's actually a buy. And like I've already shown you, basically there's 12 people saying a strong buy, and then 6 buys, 6 holds. Otherwise, this would have been actually also a strong buy. So yeah, that's the company I wanted to share with you guys. If you're interested in the company, of course, do your own research. Please don't just rely on my information here. Have a wonderful day. Assalamu Alaikum.